Hello, Verity Traders. It's our daily market recap. Let's see what happened in the markets. All right. On the news, we have tech stocks dragging the S&P and the Nasdaq down. There's been a clear rotation out of these tech stocks. The money are flowing into cyclicals, consumer defensive, small caps, home builders, energy, and industrial. This has been pretty clear looking at the charts. We're going to get there in a second. We have gold and silver that had a relief bounce. They kind of stabilized, but I wouldn't be too quick to do anything about it. We're just monitoring. The VIX spiked above 20. This is signaling high volatility. As we said, the market's been in a range, I would say, but definitely not low volatility. Volatility has been high. On the advancing and declining, we have advancing 46% of stocks and almost 50% of stocks declining, and that will be seen in the charts that we're going to see in a minute. We have a 50-50 situation of stocks making new highs and stocks making new lows. So again, we're still in a range. Half of the market is above the 50 SMA and half of the market is below. Again, we didn't really go anywhere in terms of charts. Look at the S&P. Yes, it moved down a lot and touched the 50 SMA intraday. Obviously because of the tech sector dragging down everyone. But it kind of towards the end of the day recovered some of the losses, and we're back where we were. Like this, literally, there's no movement. We're still in this range. We're consolidating with high volatility. At some point, it's going to break. We don't know if it's going to break to the upside or to the downside. But again, really didn't move. Qs are even worse. So obviously, they've been lagging much more. Again, tech sector is seeing an outflow of money. And gap down, moved down hard, very high volume, and went below the 50 SMA. Towards the end of the day, recovered some of the losses. But again, look at this. Like we are in the same range at the same price. We didn't go anywhere. In our maps, we see clearly that technology is the big red patch in here, but the usual sectors that were performing well, our pockets of strength, so the consumer defensive, industrials, utilities, energy, they're still performing well. So there's still bullishness overall. It's just that you shouldn't look for bullishness in the tech sector. Some of the financial stocks recovered a little bit. We'll see how it goes, but it kind of reinforced the narrative that there's still bullishness in this market. In the economic calendar, we have ADP, non-farm employment change, and ISM services PMI. Let's see how they will go. But again, earnings still have the center stage. We're going to have this week Google and Amazon reporting earnings. Those are going to be market movers. On the stocks to watch, we have obviously the stocks from the energy sector. We have Chevron, Valero, XOM. These again are just stocks you can add to your watch list. You can have a look at them, keep an eye on them. This is not financial advice. And on the bearish side, we have WBD and Omicron. Obviously, the communication sector that was kind of recovering the last few days lost most of the gains. So we're going to look for some bearishness in that sector. That's it for the daily recap, and I'll see you next time.